Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. There are two stocks in the market right now that are very active and full of hot air. The first one being Lucid Motors and the second one being Rivian Automotive. Now that's pretty harsh, Adam. Why are you saying that? Well, let's take a look at Rivian. So this one just went IPO a week ago. As cheap as $95, climbing up all the way 70% in the first 4 trading days, up to a high of 179, and then subsequently dropping 28% over the next 2 days, and then climbing on Friday about 4%. You have Lucid. This one's been public for a little bit longer. It was a SPAC back in early 2021, where it went from $10 all the way up to about 65. So a 6x increase, and then crashing back down 65%. And pretty much over the past month, it's climbed up 125% from about $25 all the way up to where it is today at $55. And when Rivian was falling, this one was also going down 15%, but then recovering on Friday up 17%, which is very good. So why are they full of hot air? Does Lucid justify a $90.9 billion valuation? Does Rivian deserve a $109.68 billion valuation? Well, they have super awesome looking vehicles, right? $0 in revenue. The third most valuable automaker in the world on $0 revenue. Alright, but how about Lucid? So they reported sales of about $232,000. Alright, that's something. A loss of 43 cents a share. However, the sales weren't from vehicles delivered to customers. The money came in from the use of Lucid's battery pack technology in the Formula E racing series, because shipments started after the quarter ended and weren't included in the last earnings report. Technically, yes, now they have revenue, but it hasn't been reported yet. So let me ask you, does Lucid deserve this market cap? Does Rivian deserve this one? Take a look at this. Lucid stock makes Tesla look cheap. Now, Tesla doesn't trade cheap. I mean, relative to these stocks, yes, it does. And depending which Tesla bull you ask, they'll give you a different answer, whether the stock is super undervalued, fairly valued, or severely overvalued. So I want to make this very, very clear. The price action you're seeing on both of these companies have absolutely nothing to do with their fundamentals and everything to do with emotion and momentum. Let me ask you a question. What drives stocks in the short term? I'll give you a second. The answer is sentiment. It's not financials. It's not the management team. It's purely on investors' feelings and relative expectations. You could be looking at the candlestick charts and be making absolute perfect technical analysis. And you could draw lines over here and lines like this and do whatever and have the most perfect technical analysis. But then the next day, the company comes out with some kind of news and it either shoots up or shoots down. And why is that? Because investors are emotionally reacting. And a lot of the time when the stock shoots up, it pulls back to where it was before. Not necessarily. And if it goes down a lot on, let's say, bad news, often the reaction and the sell-off is overdone. And once the novelty of that news fades, the price often, but not always, progresses back to the mean or the average. For example, if we take a look back in February, this one shot up from $34 all the way up to $65, based on pure momentum and hype for it just to come crashing down from $65 all the way down to about $16. I actually bought it this day and sold it like the next day. If only my crystal ball had told me to hold it for another month or two. So this is very important to remember, to never chase a stock when it's ripping up higher based on momentum. I mean, you do have some very special stocks like Tesla and Nvidia that have both had epic runs. Tesla, you see it pulled back, regressing back to that 20 moving day average. And just because it ran up doesn't mean it has to come crashing back down right away. Stocks don't go up forever and ever without pulling back and people taking their profit as momentum eventually fades. And even when we take a look at Nvidia, same kind of idea. It ran up, pulled back to that moving average, the earnings came out, and then it gapped back up. Granted, these are very special stocks doing very special things, as they're established companies with revenue, and they're growth companies, and the reason why investors are pouring their money into these stocks is because there are very high expectations for both of them, to which they're expected to grow into their valuations. Nvidia right now is at an $825 billion market cap, and Tesla's about $1.1 trillion. So looking back at Rivian and at Lucid. So I know with Rivian there isn't much data to go with, but we know without a doubt this is a full-on momentum stock. Just look at the numbers, it just doesn't make sense. And even looking at the data that we do have, for what so far is the peak, we see a big indecision candle with wicks on the bottom and the top, a gap down, a big red candle, another gap down, another big red candle, and even though Friday was positive by a few percentage points, When you zoom in, you see a big wick toward the top of the candle, pushing this price back down toward its open. And when you'll notice with any stock that has a major peak like this, for example, you can take a look at AMC. Take a look at the weekly. So the first short squeeze back in January, February, you see this big green candle, a large wick, and then it getting essentially engulfed by this massive red candle. You take a look at LUCID. Same idea when you're looking at LUCID. You had a big green candle and then a massive red candle. And the more experience you get in the market, the more you're able to identify when you should get the hell out of a stock, or at the very least scale out of your position and let the rest of it run in case it keeps on going up and up. As we know very, very well, the stock market can remain irrational much longer than we can remain solvent. And when you take a look at LUCID, it actually looks a lot cleaner on the charts than a RIVIAN. Although, again, that revenue isn't there, at least they're delivering cars, so that's something. But still, for a $90 billion market cap, that seems a little bit stretched for me. So how would I play this? It's not my forte, it's not my niche, I'm very bad at it, and I'm most likely to lose money playing these stocks. However, if I did choose to play either one of them, based purely on the technicals, I'm looking at RIVIAN put options. Now, why aren't I making that bet? The main reason is because the IV is so high. IV being implied volatility. The more volatile, the more expensive you're going to have to pay upfront when buying options. Let me know, is this the top for RIVIAN? Is this the top for LUCID? Is LUCID going to keep roaring up higher? Is RIVIAN going to follow? Or is RIVIAN going to crash? Is LUCID going to continue moving upward? Let me know in the comments below what you think. Are you holding shares? Are you holding options? Short term, medium term, long term? Let me know in the comments below. If you're new to the channel, welcome aboard and hit that subscribe button. As always, smash that like button and I will see you in tomorrow's video.